Equipment breakdown coverage. So, what is it? Equipment breakdown coverage is another way of saying breakdown insurance. A certain amount of money is paid every month to an insurance company, and that company will pay for either the repairs or replacement of equipment that breaks down at some unknown, unpredictable time in the future. Even though this is quite an important benefit, is it the only benefit? Or is there another factor that's even more beneficial? Let's take a look. According to Aberdeen Strategy and Research, on average, a company whose profits depend on equipment for production loses approximately $260,000 for every hour the equipment's not operating. This amount is not just the loss in profits from a reduction in production, it's also labor costs, fines and delays, unfulfilled contracts, and a domino effect of costs that increases at every stage. If a business didn't have business breakdown coverage or insurance and wanted to make sure it had the funds covered for future repairs, replacement, labor costs, and parts, it would have to take $260,000 from its profits for every hour the owner wanted to make sure he could cover all the costs in the equipment not operating. This is $260,000 that would be sitting around for an undefined period of time doing nothing. In contrast, if he had business breakdown coverage, this $260,000 could be generating more money by reinvesting in the company, spending it on expansion, the purchasing of assets that would grow in value over time, or even upgrading existing equipment. Seen in this light, business breakdown coverage is not just insurance, but it's also the way to make sure your company's capital or profits are being managed and utilized in the most profitable and beneficial way possible. So, what will equipment breakdown coverage actually cover? In addition to paying for repairs to equipment, or equipment replacement if it can't be repaired, equipment breakdown coverage will also cover any lost incomes or profits from the drop in production. If the equipment that broke down caused damage to the company's property, it will also pay for these repairs as well. Interestingly, breakdown coverage will also pay for any equipment that needs inspection by the local authority. This applies to any equipment that has a potential health hazard. For example, equipment that uses chemicals or high temperatures like boilers. The local authority will charge the company for the necessary inspection, and depending on the type of equipment, size, and amount of equipment, these costs can run very high. It will also pay for the loss of profits if the equipment cannot be operated until it's been inspected. So, in addition to equipment breakdown coverage paying for repairs, replacements, income losses, and other expenses, it's also a vital component to your company's overall monetary health. It frees up capital or money that can be better utilized to make more money or profits and be used for investments to ensure that your company will keep growing far into the future. For more information on this subject or any other, please visit www.finimpact.com.